Hey, welcome guys to our first video lesson. Let me just pull up the slide real quick. Okay. In this video, we're going to be talking about the scalper's mindset and the proper paradigm shifts that you need to have in order to trade this successfully. There is definitely a different approach to the charts when you become a scalper. You have to have a certain attitude, uh, mindset, and psychology that plays into it. Okay. And I would say that this is probably the most important video out of the entire course because if you don't have the right mindset tools, you can find yourself losing a lot of money. Okay. So you have to be able to make that shift. And what that shift includes is a big ego. Okay. So if you're the type of person that you have to achieve a high number of pips or points in your trades, then this is probably not going to be for you. Okay. This is about making money and ending the day in blue, ending the week in blue, ending the month in blue. If you're already struggling ending in blue, then this is probably going to help you a lot, anyways. Okay. So the first thing I want to bring up is big moves don't matter. Okay. We're always so fixated on capturing the entire move of a range. Okay. That's not what scalping is about. Scalping isn't about catching the big move, it's about catching a movement. When is the market most likely to move based on timings? Where is the market likely to move based on our zones? Okay. So we need to have that mindset shift where you're no longer you don't care about the big moves. Big moves happen all the like they happen at least a few times a week, right? But it doesn't matter if we capture it, right? Because that's not the strategy for this. The strategy is to get in some size and get our money out, get our money in the market and get our money out. Capitalize on the leverage that's provided by our brokers and then take the money out. Okay. As you progress through the course, you're going to see once you progress through the course and you guys actually are ready to start trading on live accounts, highly recommend starting with a demo and practicing until you can achieve profitability and then take your money to a live account and then trade it if you want. That is not my suggestion. I'm just saying that if that's something you want to do, trade a live account, then go for it. I legally can't say go and trade a live account. So I hope you guys understand that. So back to what I was saying is you want to get your money in and out of the market. The more you leave your money in the market, the more you're subjecting yourself to risk. Okay. And I really want to stress that big moves don't matter. Okay. You can't have an ego when it comes to scalping. It's not impressive. That's why I don't post my scalp trades. Okay. It's not an impressive thing. And if you're the type of person that has an ego and you need to impress everybody on Instagram or impress your friends, like, look at this huge move I caught, then this is not for you. Okay. This is about making money. Okay. Consistently. So when it comes to scalps, what are we looking for? A movement in a zone at the right time. Okay. Because based on our data and our statistics that we've compiled, markets will stop you out. Okay, we all know this. They will stop you out. Most trades are going to run about 150 pips before a reversal. Okay, for the indices, 150 points, pips, whatever you want to call it. So before a reversal will take place, markets will run about 150 pips. Now the time length for that 150 pips is about an hour and a half. Okay. So with that knowledge, you should know, okay, I should see maybe around 100 to 150 pips within an hour to an hour and a half. Okay, within that time frame, most likely market is going to reverse, and I should be out of the market. Okay, we have a set plan which requires a minimum of 50 pips per trade, and that is enough, right? And we're looking for 2 to 3 trades per day, so that's around 150 pips plus per day. Typically, my trades run for 100 to 150 pips. So, that's around 400 pips a day. And that is plenty for you to make a dent, a huge dent in your account balance. Okay. And I mean a good dent, not a bad dent. Okay. The next thing I want to mention is ending the day in blue or green, whatever platform you're using. If you can just learn to end in blue, if you can just adopt that, it doesn't matter if it's a dollar, it doesn't matter if it's 50 cents, doesn't matter if it's $5, $100, whatever it is, just end the day in blue. Let's say you're in blue for the day, end the day. Come back the next day. End the day in blue again. That's it. Just learn to do that. Once you're able to do that, we can fine tune everything so that you can have a more optimal strategy. But until you can do a end in blue, there you shouldn't be doing anything else. Just learn to end the day in blue and do that consistently for a month and then start optimizing the strategy. Okay. Then start adding all the bells and whistles. But you just got to learn how to end in blue first. Okay. Don't be afraid to TP. Um, this is a big one. Anytime you try to catch an extended move, you're most likely going to get stopped out. Okay. Because nobody knows the real direction of the markets. Nobody, I don't care who you are, nobody in the world knows where these markets are going. Okay. You have no idea. I have no idea. My mentors have no idea. Whoever you learn from, they have no idea. We can increase the probability of direction. Obviously, we can increase our edge. That's what this is all about. But at the end of the day, you can have the most perfect entry, the most perfect bias, most perfect chart ups. Everything's perfect. And then the market can just instantly fly against you. Okay. We all know this. So once the market presents you an opportunity and you found that movement that you're looking for, right? Because we all have to understand that there's something that we're looking for in the market. And when that happens, that thing that happens that we're looking for, we shouldn't be afraid to TP. And as you progress, you'll learn, okay, I understand this pattern. I understand what happens typically at this time. I understand how much longer I can hold. I understand, the way these charts are developing right now that I can hold a bit longer. And as you progress, you start to build a resistance to, or not a resistance, but a, what's the word I'm looking for? You kind of develop this iciness, I guess you could say, that you'll be able to hold longer. Okay. And as you're progressing through your trading journey and you learn how to apply this strategy, you'll start recognizing in your charts subtle nuances that happen, right? So, for example, um, or an analogy I would like to say is when you're driving down the street and you're going to make a U-turn and there's an oncoming car, and you have that instinct like that there's that right amount of time where I can still make that U-turn without that car hitting me, right? You have this judgment that you can make. Okay, that's something that can't be taught. Okay, I can't teach you that. That is just through experience, through the charts. Like you understand, like, okay, this car's coming, I still got time, and you're able to adjust your perspective a bit to be able to make that U-turn before that car hits you, right? But there's no scientific calculation that you're doing in your head saying, okay, this car is definitely 200 feet or 200 meters away from me, so I can make the U-turn. No, it's a subtle nuance that you'll notice in the charts, and as you progress, you'll understand like, oh yeah, I've been in this situation before. I understand what happens here. Definitely not taking a trade there. It's not safe. Okay. And that will be developed through time. Okay. There's no other way around it. It's time on the charts. Okay. Typically, it's going to be around 2 to 3 months before you really have everything click. Okay. And that's when you're studying. When it comes to our setups, I recommend 100 screenshots per setup through the charts, through back testing, and you save them in a folder. But that's for another lesson. We'll go over that. Okay. The goal is to be in and out of the market, right? So we get in with some size and we get out. Okay. Learn to do that. Learn to take profits and just watch. Watch when you learn to take profits. Watch when you learn to just get in and out of the markets. You're going to end the day in blue, right? You're going to start seeing, oh, blue day, blue day, blue day. And it's going to make your mindset have more confidence. Then once you are able to do that consistently, you'll be able to start holding a little bit longer, a little bit longer. And then you'll realize, okay, at this particular time, I've held this long over a particular amount of time. I know I should probably get out of this trade before it starts reversing on me. Or you'll start seeing the market bounce in a certain way where you'll be like, okay, this bounce is not a real bounce. This is like a fake out, get everybody out of the market. Okay. You'll understand how to hold these longer. Okay. So just learn to not care about the big move, right? Remember, we're not looking for the entire move. We're looking for the movement. Get in and out of the market. Okay. Don't be afraid to TP. Take profits. There's nothing wrong with taking profits. Also, you have to understand that, and this is very hard to explain, but I'm going to try my best, is that when you see me capturing 100, 200 pip moves, okay, these are scalps, right? These are scalps. So basically, I'm setting myself up because I play on the M1 charts. I'm setting myself up for just a movement. Sometimes that movement in a 1 minute, 2 minute, 5 minute candle will run 100 to 200 pips, and I have caught that. That's what it offered me based on my strategy. Cool. You're offering me this much. I'm going to TP here. That's good enough for me. I have 100, 150 pips. I don't care about the rest of it, right? I'm capturing that. Yeah, I can leave a little runner on. Sure. I don't care about that. I'm talking about the core strategy, right? The core principles of scalping. In that time frame, in that moment, as I'm entering the charts, and then I get that instant drop or I get that instant rally, right? I've known or I've learned based on my experience that when I get a huge movement like that on a 1 minute, 2 minute candle, 5 minute candle, when I get that huge movement, I know I can hold a bit longer. That's aggressiveness of the market wanting to go in a certain direction. Okay. There's ways to validate that. And through experience and time, you'll learn okay, cool. This thing just moved the fuck up. The market wants to reprice up here. Okay. So I understand that I can hold this a little bit longer than before. Okay. Sometimes on those candles, those 1 minute candles, only going to offer you 50 pips. It's only going to offer you, 80 pips and points. And you're going to have to be satisfied with that. And there's nothing wrong with that because you're collecting throughout the day several trades where they run 50, 100, 150 pips. And by the end of the day, you're up, 400, 500 pips, and you can call it a day. You've executed it on your trade plan. Your trade plan is now progressing. And as we get into the trade plan in the next lessons, you'll understand what I mean by that, right? There's trade one, trade two, trade three, trade four, trade five, right? And we have a column of all the trades that we're taking, and we're progressing through the worksheet. Okay, so it's a lot about not about, but it's a lot of getting really good entries, really good trades, high quality setups, and then working our way down the spreadsheet to compound the account. Okay, so that comes down to following the plan, following the rules. Now, there's a way to compound, and then there's a way to flip your accounts, right? So we have compounding, flipping, and then there's ways to just get in on a trade, right? So for example, I would call that freestyling, where you're in a trade, you see it, you take your profits, you're not really focused on a plan, which I don't recommend doing that. I highly recommend following a plan. But as you progress through your journey, you're going to be able to you won't need the plan anymore, if that makes sense. You'll understand how to trade at that point. You'll understand how to end up blue. So you'll be able to kind of freestyle it. Okay. And this is when you get more to like an expert level when it comes to scalping. You'll be able to freestyle it. You don't really need a compounding plan. You kind of already know how to do this thing. Okay. But as you start, you should definitely be following a plan, a pip goal, point goal, profit goal. And then, from there, you can as you get good at that, as you get good at being blue every day, every week, it doesn't have to be every day. Like it could be every week is your goal to end in blue. Just end in profit, and that's all that matters. Once you get good at that, then you can start freestyling it, and you can start, taking riskier trades because you understand you understand your risk, you understand your risk tolerance, you understand uh, how to like walk away from the charts. You understand if you take a loss, like, hey, you know what? Like I'm done for today. I don't need to be on the charts anymore. In fact, like most of the successful traders that I know, they take one or two loss. Like a lot of people could say, like, hey, I'm going to take one or two losses, and if I do take that, then I'm out. I'm going to go and do something else with my day. A lot of people claim to, they say that, but not a lot of people can actually do that. Okay, because taking a loss, it's like an ego hit. Like, I took a loss, got to make up for it. I sometimes fall victim to that. Okay, so it's a very hard thing to do is walk away from your charts, especially if you are in love with trading and it's your passion. But you got to learn that skill set to be able to walk away and come in and fight, another day. Get in sync. Okay. When you're getting in sync, there's this term that I like to use, which is iciness. It's where you're on a roll, right? You're just able to be in the ebb and flow of the market. Okay. It's just this syncness, this oneness that you have with the charts, because you understand everything very clearly. And this comes with those small wins. And those small wins will build your confidence over time for you to be able to start scaling in. You'll be like, cool. Like before I was taking, you know, zero point zero 0.01 lot size. Now I'm able to go 0.1 lot size. Now I'm able to go 0.5 lot size. Now I'm able to go 1 lot size, right? And over time, you'll be able to develop this iciness because you've developed the confidence in your trades. You understand, like, okay, this is not ego based. Like, I don't care about the big move, right? Those big moves aren't happening all the time, anyways. So let me just get my money in, get my money out, and then move along with my day. And I can increase my profits with size, right? I don't need to worry about my horizontal scaling, right? I can worry about my vertical scaling, meaning horizontal scaling I would say is trying to capture a big move, right, with a small size, or you can capture a small move with big size. Okay. So whatever you think is easier, right? So if you think, okay, cool, let me hold this trade for a day and try not to get stopped out with a perfect entry with the most minimum amount of drawdown possible, 1 to 2 pips, and let me try to capture that consistently. Is that easier, or is it easier to capture a 50 pip move versus a 500 pip move? Okay. And if I do a 50 pip move, how easy is that for me to capture multiple times a day? Okay. If I capture 10 of those a week, that's my 500 pip move right there. Okay. And 50 pip is like the minimum, right? Sometimes you're going to capture that 100 pip, 150 pip move, and you'll have like 3 of those in a day and you already got your 500 pips. Okay. But it's not even about that. It's about the plan. Okay. That, like, the account growth plan is really what you need to follow, because it won't make sense until you see the plan, so that you can understand, like, wow, like compounding at this level is insane. Like, I don't even you will not care about capturing big moves anymore. Once you have the plan, you just throw that out the window. You're like, I don't care about that. That doesn't even matter to me anymore. Okay. NGAF. What is NGAF? It's called not giving a fuck. Okay. You cannot give a fuck about anybody else's trades, anybody else's trade plans, what anybody else is doing, any other traders, any big moves, right? You can't care about that. You can't care about anybody else's profit. You can only focus on yourself, because what is that doing for you? You watching some Instagram traders fucking, 500 pip move that it took him like 15 trades that he lost before that even happened. And trust me, I know this because a lot of those IGers that you see that are posting every single day, 1 to 20 art, they hit me up. Okay. I have DMs from a lot of the big names where they hit me up for mentorships or questions. And it's kind of funny to see them, because I would look in the past and be like, dang, this guy's really good. Like, maybe I should hit him up for some mentorship. And then, couple, like a year later, I'm like, they're hitting me up and I'm like, oh shit, I thought you were actually good at this. So don't fall into, all that stupidity. Understand that that's not how this shit works. Especially with scalps, you have to understand that it's a completely different mindset, completely different paradigm. You're not here to capture these huge R 1 to 50 R moves. It doesn't happen like that. Okay. And when you learn to compound and you learn how to actually be profitable, it goes really fast. Okay. In fact, I was listening to a podcast the other day about this one trader. It took him like 3 years to be profitable. 3 fucking years. He was losing. He lost over 100 grand his first year. And he said he was just at the bottom barrel of it. Like, out of every student in the mentorship, he was the failing one, right? And then he said after like the third year or whatever, he made his first, 100 grand. Okay. And that kind of let him, be accepted in the group. Like, oh, he finally learned, like, welcome to the gang. Right after that 100 grand, 2 months later, he was doing 100 grand a month. So once it clicks, it becomes like second nature. Like, you'll have that nice iciness that I'm talking about, where you'll be able to like go in there with some size and you'll be able to get your money out and you'll see your accounts compound like at extremely fast rates. Like it's nuts. Okay, why patterns? Why do we trade patterns here? Because patterns are repetitive. Okay, if you go through your charts, you're going to see patterns being formed over and over and over again. The thing is with patterns is they have an outcome. It's either going to go up or down, right? And depending where you are at in the market, if you're at a high, if you're at a low, if you're inside a range, whatever, wherever those patterns form, they're going to have a likely outcome. Okay, that's why we trade patterns. You're either going to be right about it or you're going to be wrong about it, and you'll know quickly this was not the pattern because the pattern becomes invalidated. So whenever you hear somebody talking about, oh, you should put your stop loss where the trade becomes invalid, but nobody really knows what that means, right? What, does the trade become invalid after an OB? Does the trade become invalid after taking out equal highs? Does the trade become invalid after breaking support resist? Like, you have no idea what an invalid trade really looks like. So instead of taking that mindset, you shift it to pattern based. Pattern based meaning, okay, where does the pattern invalidate? Where does this pattern no longer become a pattern and this tells me I need to get out of it? Okay, that's why we trade patterns. And the patterns are repetitive, and patterns have a statistical edge. They have a win rate, okay, based on those patterns. Now, it's kind of oxymoron because the markets are in fact random but not at the same time. Okay, so the patterns aren't random, right? The patterns happen over and over and over again. Okay, but the outcome of the pattern is random. Okay, it could go up or down. So knowing that, our edge is the pattern, and the pattern most likely playing out in a specific way is our edge. Okay, so the pattern will have a likelihood, right? As I said, a likelihood of playing out in a specific direction. And when we stack the confluences, it increases that edge of this pattern working out. So when we have a pattern, we understand, okay, A, this pattern becomes invalid at this specific point. B, I understand that this pattern has a statistical edge, so that tells me I shouldn't care about this pattern because it's about a series of trades, not just one trade. A lot of people are so focused on this setup, this one trade has to work, this trade is going to make my account. Okay, they're afraid to go into drawdown, they're afraid to lose the trade, they're afraid to lose the money. Okay, they don't think about it in a series of trades. Okay, a series of the same pattern happening over and over again. You take the same trade, and it's up to your ability to take that trade every single time. Okay, when that presents itself, it's your job to take the trade every single time so that the probabilities stack into your favor. When you don't see a pattern and you're just trading, you're fucking up your statistics now. Trade the pattern, understand that it's statistics. Even having a 99% win rate, you can still lose your account. I hope you guys understand that. Having a 99% win rate, you can still lose your account. Why? Because there's that 1% factor that you can still lose a series of trades. Even having a 99% win rate, you can lose 5 trades in a row having a 99% win rate. And if you don't have the account management skills and the risk management skills and the mindset skills to understand that, right? Because you have to adopt the probability mindset, meaning even having a 99% win rate, I still can lose a lot of trades in a row before it starts picking back up again. Okay, so you have to understand, trade the pattern. The patterns have statistical significance, and the patterns are for a series of trades. It's not one trade. So you cannot be married to one trade. And if you're the type of person that is constantly focused on that one trade having to win, you're not going to make it. Okay. You have to understand that the losses is a part of it. They're normal losses. It's a normal thing to take a loss. Okay. If your account, let's say, is a $1,500 account and you take a loss, and now your account is, let's say, $1,300, and then you take a loss, you have to understand that over the next series of trades, as long as you are participating in the market and trading those patterns, that those losses will take care of themselves because you are playing the pattern that has a significant probability of playing out in a certain way. Okay. But you have to understand that blowing accounts happens as well. That can happen. You can blow an account. Okay. If you're not managing shit properly, or if you don't have adequate enough funds. Okay. It could just be one of those anomalies where you have a series of trades that are just going wrong for that moment. But the minute you stop trading the same pattern, you just threw out all the statistics. Okay. But obviously we're here to learn the statistical edges to increase the probabilities of these patterns to work out into our favor. So understand that it's not about one trade, it's not about one day, it's not about that particular trade. And when you're invested into it like that, and you're moving your stop loss and you're not letting it just hit it and just forgetting about the trade, let it hit your stop loss. Okay. Once you do that, um, like once you just understand that, okay, the pattern's now not invalid, I can't be in this trade anymore. If you start moving your stop loss and all that, you're gonna really doom yourself to failure. Okay. Another thing I want to talk about is accepting the risk. Okay. So understand that when you're trading and you're scalping, you have to accept the risk at hand. What does that mean? It means, okay, this is the trade, and this is what I'm willing to risk to find out if this trade is going to play in my favor. Okay. Accept that. Accept your stop loss. Don't try to manipulate it. Don't try to change it as you're in the charts. Don't try to like get, you should have, before that trade happens, you should have everything set in stone. This is what I'm willing to risk. This is where my stop loss is going. This is where I'm most likely going to take profit. This is the pattern. Everything is set beforehand. Before you get into that trade, your plan is already in action and you're okay with that risk. You're okay with, this is what I'm risking, and I'm cool with that. Like I'll pay to find out. You're paying to find out. That's all you're doing. Okay. You're once you don't accept that risk and you're trying to hold on to the trade, you're gonna subject yourself to more drawdown, right? So you also have to go in with the mindset that this trade, this is a very good mindset hack. This trade is probably not going to work out, but I'm going to pay to find out. This is most likely, most of your trades are probably not going to work out. Okay. But it's not about that, because we're taking a small amount of risk. Okay. Very small amount of risk, and increase in looking for that bigger reward. So as long as we keep our risk small, right, and we're paying to find out and we accept that risk, we have no problem. There's no reason why you shouldn't enter the trade. There's no reason to be fearful, because you've already accepted it. You've already accepted, hey, this is where the trade's invalid, and this is where I'm accepting my risk, and I'm okay with this amount of money that I'm going to lose. That's fine with me, and I know that this is most likely not going to work out. I understand that, hey, this trade's probably going to go against me, but that's fine, because I know as I progress down the probability ladder that there's going to be a trade that's going to make up for all these losses. Okay. So just understand that, understand accepting the risk, and your mindset will definitely have this shift into it where you'll have this iciness, this flow where, like, cool, I'm in and out. I'm in and out of this market. Cool. Got stopped out. Next one. Cool. Got stopped out. Next one. Cool. Won this one. Let's go on to the next one. Boom. Hit my quota for the day. I'm out. Let's come back tomorrow. Same thing over again. Accepted my risk here. Awesome. This one's probably not going to work out, but let's see what happens. Boom. Okay. So you have to have this mindset of just this constant, like, it's like a hustle. Like, boom, I'm going in, coming out. I understand this is my risk parameters. I understand, like, hey, like, this is most likely not going to work out. I'm fine with that. I'm comfortable with that. I'm no longer fearful of the market. And now you're not bending to it, right? And you're not going to make the market bend to you. Just understand that. But you're no longer bending to the market. Okay. The market doesn't care about your emotions, doesn't care about any of that. It has no personal vendetta against you. It's just the market. Okay. So when you understand that, um, you'll have that iciness that I'm talking about. Okay. Again, understanding the probabilities, understanding when you're most likely going to be wrong or right, um, understanding that patterns play out in specific ways, understanding that it's a series of trades that need to take place for you to have that data, right? So you need statistical data, which you guys are all going to be tracking, you're going to understand that, hey, it's not about this one trade. It's about the probabilities of a collective of trades. Okay. It's a collective mentality. It's not, hey, just this one trade. Hey, this one trade. This is 100% going to work. Here we go. Let's watch it drop. Let's watch it rally. No. Okay. Get rid of that. Like, fuck that. Okay. It's all about series of trades. Okay. And then you will start to see your account grow. Smaller losses, bigger wins. That's pretty fucking obvious, right? You want to keep your losses small. That's why we have a risk management plan. You know, if most of the time you're gonna see instantly if your trade works out or not. Okay, if it doesn't instantly drop or start declining or instantly rally, you're probably not in a good trade, and you can just let it hit your stop loss or just get out of the trade. Okay. Now, when I say that, okay, you're probably thinking like, oh, well, didn't you say accept the risk? Yes, accept the risk. But also, when it comes to that intuition that I was talking about, that those nuances that happen over long periods of time of trading these patterns, you'll start to understand the patterns a lot more. You start to understand like, okay, this pattern it's not doing what it normally does, because you have to have that live visual of the bars forming in live action, right? And as you start to see those large or sorry, large. As you start to see those patterns forming, you'll understand like, okay, it's really doing that weird thing again where it just kind of sits in this consolidation, and then it's most likely going to take me out. Let me just save myself from taking this loss and just fucking get the fuck out of it. I'll find another trade that'll be a lot better than this, because I understand that this particular one right now, not happening. So let me get out. And this is only through time on charts that you'll be able to do this. When you first start, just let it hit your SL. When you're in your demo accounts, right? Just let it hit your SL until you're very confident and you can start seeing those subtle nuances in the market. Okay. And in and out, like I said, just get in the market, get out of the market, and just collect profit, right? Just collect profit, take profit, stop being that person that needs to catch those big ass moves where you're sitting there just getting hit break even over and over and over again, and you're like, what the fuck, I keep getting taken out big break even. If I would have just take profit, if I would have just done this, if I would have just done that. Stop saying that and just do it. Stop saying, oh, if I would have just taken profit here, I would have been up 500 pips today, but I've been trying to chase 500 pips the whole day on one trade. No, just take your profit, get the fuck out, get your money, call it a day, come back the next day. Promise you, market's not going anywhere. Promise you, there's going to be another setup. Promise you, there's going to be another 150 pips run, 150 pip run, and that's all you need. Okay. And the next lesson, we're going to talk about account planning and risk management.